Fox, and this is the Prospector Podcast. And I have Jeff Christian, the founder and managing partner of the CPM Group. Welcome, Jeffrey.
Thanks, Michael. It's great to be back with you.
Yes, and we're going to talk about something you and I don't normally talk about it, but almost about once a year. We're going to talk about platinum group metals. You've just released the annual report on the metals group. So it's a good time for us to take a look at that market. But before we get into our discussion, let's give people an overview of what the CPM Group is.
Well, CPM Group is an independent research and consulting company. We do basic research on precious metals and other commodities, including specialty metals like high purity manganese that's used in electric vehicles, and tantalum and niobium that's used in semiconductors and high-tech applications. We do a lot of basic data development. So how much metal is actually being produced at mines, how much is being recovered from scrap, how much is being used in different industrial applications in different countries, how much is in above ground inventories, what's the role of investors in a given market. And then we make price projections, supply, demand, and price projections. So we take our gold and silver price projections out 10 years. We take our platinum group metals projections out to 2050, so 25 years right now. We'll probably be adding 5 years to that at some point in the near future. So we provide basic research, basic analysis, and then applying that to investment decisions, both for industrial and commercial entities and governments, as well as a full range of investors. And we are, as I said, an independent research company. We're not a marketing group that is paid to promote gold or silver or platinum group metals. We are paid to be right, even if it means saying, don't buy this now.
Yeah, that's one of the things I like. You guys are data driven, and data is what data is. And it's good to have people to interpret that data appropriately and treat it the way it's supposed to be. I am honestly puzzled by the performance of the platinum group metals this year. In spite of what you would think to be a lot of headwinds that should be slowing that market down, it's had some pretty good growth this year, both in platinum and palladium, and I'm unable to see why. So let's go to the expert and say, did you guys see this coming, and what's causing it?
We didn't see the prices spiked higher in June and July, and we didn't see that coming. What we did see was that fabrication demand for platinum and palladium and rhodium in the auto industry was holding up perhaps better than a lot of people had expected, and that the mine production of metal in not only South Africa, but in other countries, was perhaps weaker than a lot of people had expected. So you had a tightening of the supply-demand balance, the surplus or deficit. There's the surplus, the way we measure it in platinum, and the surplus has contracted sharply in 2024 and 2025. But, the big headlines were, hey, we probably are headed toward a recession, but we haven't been in a recession yet. And in fact, the auto industry on a global basis has held up relatively well. So the fabrication demand has been relatively well, while the total supply, not just mine production, but also secondary recovery from old electronics and old automobiles, has been contracting, perhaps not in a way that we didn't expect, but maybe sooner than we were projecting. So the market's been tightening, and then you saw this spasm in June and July.
What else I find really interesting is that through most of my life, if I compared platinum and palladium prices to the price of gold, they were always more expensive than the gold price was. And until recently. And I'm wondering, are we going to get to a stage where they're going to play catch up to the gold price? I know there's probably very little correlation there, but perception's reality when you've seen it the way that it is for most of your life. It's not unreasonable for someone to believe that that would be, the expectation. So is that a possibility?
It's a possibility, but it's not probable in our view. And I'm older than you, so I started off at a time when platinum was at a premium to gold consistently, and palladium actually was at a discount to gold back in the 70s and early 80s. But I tell the story. I started at J. Aron running their research department the first business day of December 1980. And on the Friday before that Monday, the price of platinum had fallen below the price of gold. So I started at J. Aron, and the first morning, the head of trading said, "Okay, normally if platinum falls below gold, we would buy platinum and sell gold. What do you think, Jeff?" And this is December 1980. The gold price had risen to very high levels, record highs in January, and it had come off. Platinum had risen to record levels in April of 1980 and had come off. And we had gone into what was then the deepest recession in the post-war period. So I said, platinum prices have fallen below gold because gold is stronger right now because investors are worried about the recession. And platinum is weaker because the auto industry is in a recession. So I would not buy platinum and sell gold. And based on that, they didn't do that trade. They did the reverse trade. They bought gold, sold platinum, and they did very well. The platinum price stayed below gold until early 1983. So that was like the first time where we saw platinum cheaper than gold. Going forward to where we are today and going forward for the next foreseeable future, in our view, we're looking at the gold price at a record high, and we're looking at gold prices staying at record highs and moving higher over the next several years because of the economic and political and social uncertainties and disagreements and hostilities in the world. And that's something that we started telling people buy gold in November of 2000. And we said, we're moving into a decades-long situation of a much more hostile economic and political environment where investors will want to buy more gold on an ongoing basis. And we talked about the golden renaissance and an upward shift in the investment demand curve for gold. And all of that is continuing and in fact worsening. So we expect gold prices to stay strong and move forward. On the platinum side, platinum's major use is in autos. It is steadily losing market share to battery electric vehicles. The positive is that the price is low, and the prices, not just platinum, but platinum, palladium, and rhodium, are at levels that are stressing mining companies. So the only positive that you can say about the platinum price going forward is, well, will supply fall faster than fabrication demand? And that's what's happening right now, the last 2 years. And that's probably going to happen. That will give you blips in the platinum price, but it's not going to give you a sustained upward move the way we expect gold to move. Platinum is, some investors will buy platinum, but platinum investment demand is much smaller. Investors see gold as a financial asset that competes with the dollar and other financial assets. They see platinum as an industrial metal, the supply, demand, and price of which are really driven by the auto industry and other industries that use platinum. So we don't see platinum and palladium returning to premia over gold in the future.
Yeah, we've had a bit of a significant uptick in the platinum price from the start, from the beginning of the year. And as you pointed out, a lot of that has been in the last couple of months. Are existing mines able to mine the platinum that they have profitably at these prices? They're well off the highs.
There are some mines that are on care and maintenance right now. There are some mines that probably will be shut down on a permanent or semi-permanent basis yet this year and into 2026. There are other mines that can operate profitably. So the mining industry will continue to do this. And you'll see that the prices of platinum, palladium, rhodium, the mix of PGMs will have to increase somewhat in order to support the mining industry going forward. But it's probably not nearly as dramatic as a lot of people think, because there is that there. And then you also have the fact that you've been using platinum, palladium, and rhodium in auto catalysts since 1972 in the United States for platinum and palladium, 1981 in the United States for rhodium. Less, shorter term periods, but for decades on a global basis, there's a lot of platinum and palladium and rhodium that's available in old spent catalytic converters from cars, as well as old electronics and other industrial products. So there is the potential for increased secondary recovery in scrap that could offset some of the losses that we expect in mine production over the next few years.
I've heard a number of things that is out there in the Ethernet, talking about reasons for this current price blip. And there's a couple of them that I thought we would address today. One of them is that people, because of the high gold price, have started to buy platinum jewelry, and that's resulting in higher platinum prices. But as you've alluded to, the catalytic converters in autos is the biggest use for that. Jewelry is a drop in the bucket, is it not? Like, that can't possibly be the reason.
It's not the reason. Jewelry is a smaller use of platinum and palladium, but it is a significant use. I mean, our expectation is that you've been using about 1.9 million ounces of platinum a year, really for the last couple years. And it could be a little bit higher, around 2 million ounces this year, compared to, say, 3 million ounces or 3+ million ounces in the auto industry. So it's not as important as auto, but it is important. But I think that the idea that consumers are buying platinum jewelry because platinum jewelry is cheaper than gold jewelry doesn't stand up to statistical scrutiny. What we have seen, what we have seen is that there has been some increase. Our estimate was about maybe 32,000 ounces of increased use of platinum last year in the jewelry industry. And, maybe more than that, maybe another 70,000 ounces increase this year. Marketing groups have much higher figures. The company that at least used to be the largest importer of platinum into China, which is where the Chinese, the saying, whether or not it's true, is that it's Chinese consumers buying platinum jewelry instead of gold jewelry. The largest importer of platinum into China has written that it has seen increased purchases of platinum by jewelry manufacturers, but it's not clear the extent to which they're buying for inventories versus actually buying to make jewelry because end consumer demand is high. So they also are skeptical about how much platinum jewelry is actually being bought by individual consumers, but they have seen, and we have seen, inventory buying both by the Chinese jewelry industry, but also the Chinese trading community, banks and trading companies that supply not only the jewelers, but also auto catalyst manufacturers, petroleum refining catalyst manufacturers, the glass industry, which has been particularly hard hit in China, and other industrial users. So we've seen increased platinum into China, but we've seen increased platinum inventories and trading volume in the Shanghai market. It's not clear how much of the platinum that's gone into the Chinese market actually is going into jewelry. And I should step back and say I misspoke when I said we've seen increased amounts of platinum going into China. We saw a couple strong months, but actually in the first half of this year, Chinese platinum imports actually were down from the same period last year.
Okay. Well, that throws a curve to the second part because
Yeah, I'm sorry.
the second factor that I wanted to address was Chinese purchases, because there's talk out there that there's been an increase in the amount of platinum China has been purchasing. You're saying that's maybe not the case, but what I was wondering, the two big platinum producers in the world are Russia and South Africa, and Russia being under sanction the way they are, and China supporting the Russian war effort against Ukraine the way they are, I was wondering if that could account for China purchasing more platinum on the market in order to prop up the Russian war effort.
I don't know that that's the case, and I don't know the extent to which the Chinese government actually is supporting the Russian war effort. They say they are, and they say things like that, but the reality may be that the Chinese government is less supportive of the Russian war effort in Ukraine than a lot of us think. I don't know that they would do that on their own. I do know that we've seen in the case of the Platinum Group markets in 2022 and 2023, we saw that the Chinese government was helping Russia in some ways, but in other ways it was less supportive. And it was opportunistic. It's like, oh, if we're going to have opportunity to make money by providing some support and providing a back door for Russian businesses, we'll do that. Yeah. So if you looked, because there were sanctions on doing business with Russian banks, there were companies around the world that were buying PGMs and other things from Russia or selling things into Russia. And if you tried to use China as the conduit for the payments, what you found was that the Chinese were extracting like 30 or 60% of the value of those transactions, whereas other countries were saying, I'll do it for 10% or 15% fee to be the intermediary. I'll take rubles and then I'll sell dollars, or vice versa. The Chinese were saying, yeah, if you want to do business with Russian entities, we'll take the majority or at least a third of what you are the transactions. So yeah, I'm not sure that China would do that for Russia.
That kind of debunks a couple of those myths as to why platinum and palladium have been on the run and the tear. Something else crossed my eyes on the internet, and it's one particular analyst who's made a suggestion, and that suggestion was that Russia and South Africa should get together and squeeze the short market in platinum and palladium. So I've got two questions on that. The first one is the obvious. If they tried that, would they be successful?
Yeah, that's funny because, like 40 years ago, a reporter saw Nicky Oppenheimer of the Oppenheimer family that at the time was the largest shareholder in Rosenberg Platinum at the Bolshoi Ballet. And the next thing you knew, people were saying that Nick Oppenheimer was in Moscow to negotiate a PGM cartel with the Soviet government. And then it didn't happen. He actually went to the ballet. So your first question is, would it work? Well, Russia needs its PGM foreign exchange earnings. If you look at the Russian government's finances, they're in terrible shape. They're buying and selling gold month to month to support the government's finances, let alone the war effort. And they have severe economic problems. They have not used PGM exports as an economic weapon, nor has the United States, East Asian, and European governments said, oh, we're going to put embargoes on PGMs, because they know their auto industry needs those Russian platinum, palladium, rhodium to make the automobiles that represent a substantial part of economic output in those industrialized countries. So Russia probably can't afford to withhold platinum group metals, and nor can South Africa. Platinum group metals are, I think, still the largest source of foreign exchange earnings for South Africa. And South Africa has a chronic shortage of foreign exchange. They desperately need a constant flow of foreign exchange to pay for imports. So they really can't afford to sort of say, hey, wait a second, let's withhold PGMs. So I don't think that either of them have the financial capacity to put together an effective cartel. In addition to that, to be honest, Russia, the government stopped selling and exporting PGMs 25 years ago, and it's a private company that exports PGMs now. And the same is true well, it's not true. The same is not true in South Africa. In South Africa, you have a number of private companies that mine, produce, refine, and export PGMs. It's not the government. They're not government state-owned corporations. So there are domestic legal issues about doing that, as well as the probability that they just don't have the financial wherewithal to mount an effective cartel.
Okay. You kind of addressed the second part of that question a little bit. The question was that if they could, why would they do it?
Yeah. Yeah.
And
And to be honest, the Russian government and the Soviet government before it went out of their way to not use imports and exports as political weapons. People might argue differently, but if you look at the data, they've always said, look, or as Nikita Khrushchev said, the United States will sell us the rope with which we'll hang them. They have gone out of their way to try to not use exports for political leveraging. So I just don't see it in their DNA, their political DNA.
okay, how about the South Africans?
They've never done that either.
Okay, so let's pivot away from the supply and let's go back to demand here for the last part of this discussion. The number one use for PGM metals, as we all know, is the automotive industry, the catalytic converters. And there's been this narrative that PGMs are going to be less and less required because the automotive industry is transitioning away from gas-powered vehicles to electric-powered vehicles. And myself personally, I've always looked at it as that the automotive industry was always trying to solve the wrong equation. And let me explain. I drive a Prius hybrid vehicle. I get about 675 kilometers to a tank of gasoline. And it takes me 5 minutes to fill that up at my local gas station every couple of weeks. If I were to take that car and get an electric vehicle, my range goes from 675 down to approximately 275 kilometers. And it's going to take me 8 to 10 hours for me to charge that battery. And I've been always of the belief that that's the equation. It's the convenience factor of I get to go farther without filling either my battery or my gas tank, and I can fill said, gas tank or battery. I can fill the gas tank considerably faster than I can fill the battery, and that's the equation the automotive companies should be solving. As a result, and I'm starting to see this coming now from a lot of automotive analysts that are suggesting that we're seeing a split in the world between the West and the East. The East is moving more and more towards electric vehicles, and there's pushback in the West for these electric vehicles. And they're starting to take and retool their thoughts and plans for the Western Hemisphere for hybrid vehicles. So first off, that takes away the headwinds for catalytic converters because hybrids will need them. And it's my understanding hybrid vehicle catalytic converters use more PGMs than regular ICE vehicles or internal combustion engine vehicles do. Is this something that the CPM Group is following, and what's your thoughts on that? I know that was a long preamble.
That we are following this, and we can divide the auto market, global auto market, into, as you said, East and West, or developing countries and industrialized countries, and then you can even subdivide that even more, so that there are, for example, Norway is a smaller country that is geographically separated from a lot of other countries, except for Sweden and Finland. And they have a very high incidence of electric vehicles because the demographics of use of vehicles in Norway are shorter distances, right? But then when you go to the body of the continental Europe, or you go to North America, what you find is exactly what you were talking about. Again, these demographics of use, it's the convenience factor of, I can fill up a hybrid, with a couple gallons of gas, or I can wait, 8 hours, 10 hours while my car charges if it's a battery electric vehicle. Now, solid state batteries may someday make for more rapid charging of electric vehicles, but that's beside the point. If you look at the industrialized world, if you look at the consumer surveys in North America and Europe, more than half of the people who have bought and are driving battery electric vehicles have said that their next vehicle they buy will not be a battery electric vehicle. They are dissatisfied with the way they work, and they just don't want to buy another battery electric vehicle. They are interested in hybrids, and you are seeing more demand in the hybrids. And yes, the hybrids use more PGMs per vehicle. And there are a couple factors there. One is that with hybrids, most of the pollution comes out with what you call a cold start on the engine. So if you look at where the pollution comes out in a regular, internally combusted engine or diesel vehicle, until the engine warms up, they're kicking out a lot of harmful gases. Once the engine heats up, that falls off. With a hybrid, you're starting and stopping the engine so that you have more cold starts and you have more harmful exhausts that have to be either reduced or oxidized. So you need larger, more PGM intense catalytic converters in those hybrids than you do in a conventionally powered, petroleum powered vehicle. So yeah, hybrids use more. And then in addition to that, you have in North America, you have very large hybrids. And the larger the engine, the more PGMs. So that's the industrialized world. And you're seeing, as you said, headwinds on the battery electric vehicle sales, increased reliance and shift toward hybrid vehicles, which is more beneficial for platinum group metals. There's a third part of the market that I'll try to remember to get back to. If you go to China, you see a greater reliance on smaller vehicles and battery electric vehicles. And that's partly because that's what the government has asked or suggested that citizens buy, but it also has to do with the demographics of use within China, where a lot of people will use their vehicle in their city, but if they're going to go on an intercity travel, they'll take a train. So there you're seeing a higher proportion of the new vehicles being battery electric vehicles. And that dichotomy is going to continue, and it's going to shift within those two big markets. So, the demographics of desire for hybrids versus batteries versus conventional vehicles is different in France and Germany than it is in Norway or Sweden. And the difference is different in India or Indonesia than it is in China. So, that's there. There's a third market that you have to pay attention to, and that is commercial vehicles. And we're talking about larger trucks and intracity buses as well as intercity buses. And those things tend to be diesel, and they're probably going to continue to be diesel because electric vehicles just don't have the power to bring to these larger heavier vehicles that diesel fuel has and diesel engines have. And if they're diesel, they're going to be more platinum intense, and they're going to use more platinum and palladium and rhodium, and they're much larger engines, so they use more of that stuff. That market has been relatively vibrant, the commercial vehicle market, but it's heavily dependent on economic outlook. You go into a recession, one of the things we've seen in the last few months is corporations pulling back on buying big commercial trucks because they're concerned about the the potential for a recession. And they're also concerned that the trade wars will reduce the transportation of imported goods, not only in North America, but on a global basis.
Okay. So in North America, I'm agreeing with what you're saying, and I find it really interesting because it goes along with another thought that I've had that electric vehicles tend to be more of an urban vehicle. And you mentioned that Norway is a little bit more compact. China, people use their vehicles in urban environments. Same with India. My own experience is that there's a lot of electric vehicles here in Prince Edward Island where I live. You can get from one end of the island to the other in 2 hours and 45 minutes, literally. So as long as you stay on the island, electric vehicles make a whole lot of sense. It becomes problematic the moment that you leave the island, and it kind of reinforces that narrative that we just spoke on. So in the Western world, like you said, in China, it's almost like a government dictate that they have to buy electric vehicles. In a lot of the Western nations, they're trying to tell us that we have to have electric vehicles by 2030. Given the pushback, given everything that we've discussed, do you see governments pivoting away from that and making the mandate hybrid rather than electric vehicle? in that better than not doing anything at all, and we can't get to perfect.
I think the only place where you're seeing governments pivot away from it is the United States. And, again, that's a political theory based action. If you look at Europe, Canada, Latin America, Asian nations, you're seeing governments continue to try to support an energy transition. And, the US government has made a decision to go backwards instead of forward. And that's really the only place where you're seeing that.
So does that fly into the face of what we just discussed, that there's going to be a movement towards hybrid? If 2030 is the magic year, this whole discussion becomes moot in 5 years' time.
Yeah, it does. I mean, you mean the movement back toward ICE vehicles and away from electric vehicles. Again, that's primarily in the industrialized world, and primarily it has to do with consumer preferences in both North America and in Europe. And insofar as the US government has moved to take away economic stimuli to encourage the move toward electric or hybrid vehicles, you might see some reduction there. But most of the reduction seems to be consumer dissatisfaction as opposed to government suggestions that we should be burning petroleum.
Okay. So we've covered supply, we've covered demand, we've covered the mining people, we've touched upon some false narratives out there. Let's take a look at that next 5 years. What do you see happening in the platinum and palladium markets over those next 5 years, and maybe beyond?
Well, look, the platinum price, starting with platinum, the platinum price is traded between 800 and say 1100. It's had a couple spikes up 2021, 2022 to $1,200 before June. But it's basically traded between, say, $800 and $1,100 for 11 years, from 2014 until now. And it was able to do that partly because the palladium price rose very sharply into 2021 and 2022, so that the South African producers could lean on their palladium and rhodium revenues and produce platinum that would be sub-economic if it were just a platinum mine. Our expectation is that the price of platinum, it spiked higher now for 2 months. It has come off. It got as high as, $1,504 a couple of weeks ago. The last time I looked, it was like $1,340. So it's given up more than half of that spike higher. Our expectation is that it will drift back and trade in the $900 to $1,100 or $900 to $1,200 range for the next several years. It could spike higher depending on how rapidly mine production declines and what happens on the economy. If we do go into a recession on a global basis, which is CPM Group's primary economic outlook for the next 2 years, then you would see a decline in auto demand as well as probably other demand. You've already seen a decline in the glass industry's use of PGMs because of weak markets. That could then continue to keep that price in that, $900 to $1,200, $900 to $1,100 range. For palladium, the price, as I said, it did rise very sharply into 2021 and 2022. It's come back down, and it too has been trading for the last 2 years until June and July. It was trading between, say, 800 and 1100, 1150. And our expectation is, the price has spiked higher. Our expectation is that the price will go back to that trading range that we've seen for the last couple of years over the next couple of years. And so our expectation is that you'll see the palladium price drift back down into that $800 to $1,200 range that it's been in since the end of 2023. There are potential for spikes higher on supply disruptions, and there are potentials for spikes lower on economic recession, reducing automotive demand further.
Wonderful. As we alluded to at the very start of this discussion, you guys have just released your annual outlook, your book on PGM metals. That now is the final of the three books that you publish annually, one on gold, one on silver, one on PGMs. If they want to get their hands on the PGM book or the other two, how would they do so, Jeff?
The easiest way is to go to cpmgroup.com. There is a store on our website, and you can click on it. You can find all three yearbooks. They're $160 US each, and they're ebooks, so you can buy them and download them immediately. The last page of each book is, if you want to have this printed, you can take the PDF to a copy shop, and here are the specifications to have it printed, and if the copy shop does perfect binding, perfectly bind it. That's the easiest way. You can also send an email to info@cpmgroup.com and say, I'd like to buy that book.
Wonderful. And if they want to follow your musings on these markets and where everything's going, you're very good at myth busting as well. How would people follow your work?
Our work, the easiest way to learn more about what we do and what we can do for you is to go to our website, cpmgroup.com, and there's this enormous amount of reports that we've done for ourselves and that we've done for our clients, as well as videos and other things. There's a lot of free reads and free videos on our website that give you a very good understanding of who we are and what we do. We also have twice weekly YouTube videos that if you go to YouTube and search cpmgroup.com, you'll find videos there that talk about the current markets, but also talk about longer term topics. So we talked about PGMs recently. The video that we did on Tuesday, the 5th of August, talked about some of the reasons why a gold price reset would not happen and would not work and would not be effective. So we'll address topics that are important to the precious metals markets in those videos.
Wonderful. Thank you very much for joining me today. And it's been an excellent discussion on the PGM markets. Clarified a few of my thoughts, and I hope it did the same for our listeners.
Thanks for having us.
Wonderful. Thank you, Jeff. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.